Hi, I'm Jeannine Lecy. I'm co-author of Start Right, Build Your Own Business. It's really important that if you are wanting to buy an existing business, one that's been there for 2 years, 5 years, 30 years, that you have the books reviewed by an accountant. They see things in the balance sheet and in the profit and loss or the income and expense report, whichever one you want to use. They'll see things there that you don't see. If you've never been in business before and you're wanting to buy an existing business, chances are you don't have the experience of being even able to read that financial statement or even understand it. Like, what's an asset? Well, that's the stuff that we own. What's a liability? Well, that's what we owe against what we own. And what's equity? Well, that's what's left over. Then we have the income and expense report. Income is just what it says. It's the income generated from the product they're selling or the service they're providing. Expenses can be one of two things. It can be categorized, so what's direct expense, which means this is what it's going to take to make that money, or overhead expense, what it's going to cost to run this business. You need to be prepared for all of those. An accountant can look at these financial statements, give you really good, viable advice on, you know what, they're making a lot of money, but they have a lot of expenses. Even if I drag out of there the things that are pertinent to them or personal to them, it's still not going to make enough money for you to make those payments to the bank, to borrow the money to buy that business. Now, if you've been in business before, chances are you can look at these financials and you can think that, this one is making some money. Overhead costs are kind of low. They don't have a lot of employees, so payroll is kind of low. Looks like they've been taking home quite a bit of money. Then you look over at the balance sheet and you look at the equity section of your balance sheet. You've got either dividends, distributions, or draws. They all mean the same thing. That means extra money they've taken over and above payroll. So if they can do all those things, then that means they're making enough money for you to make a payment to the bank or a payment back to you for your money that you're taking out of savings to purchase this business. So yes, be really, really careful, and mostly contact an accountant and have them look at your paperwork.